School is closed. But despite problems with jobs, the markets are focusing on the positives. Here they are. Here's why the markets have been ripping higher. Number one, you got vaccines up, cases down 50% in a month. You got 1 to 2 trillion in stimulus coming. We don't know the number, but some bill will pass. You, of course, have the easy Fed, 0% rates and $4.5 trillion in money floating around the globe. And a little bit less sort of obvious, the yield curve. Watch that, up 7 days in a row. We've only had one 8-day run on that yield curve tightening in a decade. Joining us now with more is Michelle Meyer, head of U.S. economics at Bank of America Global Research, and Ernesto Ramos, chief investment officer at BMO Global Asset Management. Ernesto, I'll begin with you. You saw sort of not our wall of worry, our wall of ripping. I mean, you got these things that are out there that are all kind of factored in. Is there one of those that's more important to you and your team vis-a-vis the markets?
Well, the most important one is one that you didn't mention, which is the earnings growth outlook. In 2021, the consensus has the earnings for the S&P 500 going up by 30%. And at the end of the day, we think that's what's driving the market higher. You're seeing estimates being revised higher, which has dropped valuations by about 4 points on the S&P in the last few weeks. So that's really fueling the growth in the market right now. And not to mention the ones that you already did talk about. The yield curve is very interesting. The yield curve shows that the growth stock sector might be giving way to value stocks, because as yields go up, value stocks come more into play, and small caps and value stocks. So we think that's an area where you want to make sure you have some exposure to.
Okay, yeah, Michelle, would you agree with that? I mean, the yield curve, I know it's a little bit wonky, probably a little bit boring, but it matters a lot to the banks and the financials, which matter a lot to the market. And to Ernesto's point, could it be the push or maybe the result of this kind of rotation that we have seen?
So to me, I think it's important to consider why the yield curve is steepening and what that tells us about the economy currently. The steepening in the yield curve, the backup of rates, is a story of stronger growth. It's a story of potential inflation pressures. And it's a story that suggests that the economic recovery is going to pick up speed. And we very much agree with that. We're forecasting 6% growth this year. We think we're going to see a pretty meaningful acceleration, particularly in consumer spending right around the turn of the year, provided, of course, that the bullet points that you laid out in the beginning end up proving to be right. We get another round of fiscal stimulus. The virus cases continue to come in and come lower and lower, and people feel as though the coast is clear to start engaging in the activities that they hadn't before.
Yeah, and how much does the Fed play into that, Michelle? Because let's say that we see a turn and virus cases start to go up again and things reverse. The Fed and maybe the Treasury, too, with, of course, Janet Yellen there, they've got our back. So it's almost like, I feel like we're in one of these, if the news goes bad, don't worry, the Fed has got our back, at least financially.
Well, this comes to this idea of the Powell put or the fiscal put, which is there now as well. You know, if the economy were to weaken, there's a very strong counter from both monetary and fiscal policy. On the monetary side, it would probably just mean that they delay the tapering of asset purchase. They continue to expand their balance sheet. They kind of re-embrace a much dovish stance again. And on the fiscal side, if the economy were to weaken, it probably would lead to a larger package and a more timely package. So certainly there's that counter that's really, really important. But in our baseline, you end up seeing what is a very favorable situation, which is kind of this 1-2 punch of a low virus number coupled with the accumulation of stimulus. And it's very powerful for the economy.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.